Hello friends, we'll be discussing an illustration which will be completely related to pro rata, calls in arrears and advance. Now when we talk about pro rata allotment, we talk about calls in arrears, calls in advance, or rather interest on calls in arrears and advance. All these things will be incorporated in this illustration and we'll figure out exactly what needs to be done, what are the interest entries that has to be passed, especially when it comes to calls in arrears and calls in advance. We'll have different case studies as compared to this specific comprehensive problem, which is the last problem of this topic. So let's start with the case studies and figure out what exactly do we have to written down, or rather we have to go ahead and jot down is the details. So the first thing that we'll be doing here is that we'll be registering 4 case studies for your reference. So let us write down the case studies first of all. So now that we have completed with the illustration, we have figured out all these case 4, or rather all these 4 cases that has been mentioned in this specific illustration. Let us read out each case one by one and we'll figure out what exactly we have to do in this kind of illustration. Now, the case 1 refers to Messrs. ABC Limited, who has issued 4,000 shares of rupees 10 at rupees 12. That means here is the case of clear-cut issue of shares at premium. 10 rupees is the face value, the issue price is 12. That means 2 rupees is the premium that will be adjusted when it comes to allotment due. On application, they were taking 2 rupees here. On allotment, they're taking 6 rupees, that is 4 rupees on allotment capital and 2 rupees as security premium. And on final call, they are taking 4 rupees here as they have mentioned. Now, the issue was for 4,000 shares. However, they have received a subscription for 10,000 shares here. Now, here they manage the whole scenario of 10,000 subscription by first of all refunding 2,000 shares and then completely allotting 2,000 shares. Whatever balance has been left was then provided as per pro rata ratio. Now, there is Mr. A who had 200 shares with him. He defaulted on the allotment and final call, which has been mentioned. Mr. B, who is the holder of 500 shares, he defaulted on final call money, which has been also mentioned here. Now we have to prepare the journal entries and we have to prepare the balance sheet in case 1. Let's move on to case 2 now. Now when it comes to Mr. Case 2, or rather when it comes to case 2 here, Messrs. XYZ Limited is the company in question. They issued 8,000 shares here and all the issue was done at rupees 10 itself. On application and allotment they take, or rather they took rupees 3 each, application 3, allotment 3. And on final call, they took rupees 4 here. All shares were fully subscribed and completely allotted. Now there is Mr. Z who had 700 shares with him. He didn't pay the final call money. That means on 700 shares, final call money wasn't received at all. Mr. X, who had 1,000 shares here, who paid the final call money when the allotment was due. That means he paid the allotment money as well as with that, he paid up the final call money. That means here is the case of calls in arrears and calls in advance both. We have to prepare the journal entries and then we have to prepare the balance sheet accordingly. Now, this was case 2. We'll move on to case 3 now. Now, when it comes to case 3, Messrs. Incorp Limited is the company in question. They issued 10,000 equity shares of rupees 10 each at rupees 12. Here, we understand that this is again a case of premium. That means issue of shares at premium. Now, the subscription they received here was for 40,000 shares. 10,000 is the issue. There is a massive subscription that we have received, that is 40,000 shares. Out of which 10,000 was refunded and the balance 30,000 was then provided with pro rata allotment of 10,000 here. On application, they took rupees 3. On allotment, they took rupees 6. 4 rupees is the capital, 2 rupees is the premium. And on final call, they took rupees 3 here, which has been mentioned. Now, Mr. A paid allotment and final call money together. That means when the allotment was called for, he paid the final money as well, along with the allotment money, and that was for 500 shares. This is the clear case of calls received in advance. Mr. B, on the other hand, failed on allotment and final call money for 600 debentures, post which the company decided to go ahead and forfeit his shares. We have to pass the journal entries and balance sheet for the illustration that has been mentioned in case 3. Now, case 3 has been completed explaining. Let's go on to case 4 and figure out what do we have in the last case. The company that is related is Messrs. Outscope Limited. They issued 20,000 shares of rupees 10 each at rupees 8. That means it's a case of discount on issue of shares. They received the subscription of the issue itself. That means 20,000 issued, 20,000 subscription received, nothing more, nothing less. On application, they were taking 2 rupees. On allotment, rupees 4. And on final call, they are taking rupees 2 here. Now, Mr. C paid only until allotment money, which has been mentioned. And that was for 1,000 shares. That means only allotment money has been paid. Final call money is yet to be paid by Mr. C. That means this is a case of calls in arrears. Now, Mr. D, who had 1,000 shares, he paid for the allotment as well as for the final call money when the same thing was applied for. That means when he gave the application money, along with that application money, he gave the allotment, he gave the final call money as well. That means he paid all 8 rupees for all those 1,000 shares in one shot while he applied for it. Now we have to pass the journal entries and we have to pass the balance sheet here, or rather we have to prepare the balance sheet here. Now that all these case 4s have been studied, it's time for us to go ahead and start with the journal entries of case 1. So let's start with that. So for the first case, we have mentioned certain entries here. We have mentioned certain details of allotment due entry and the receipt entry for application. So the first entry that we have mentioned, in the case 1, the issuance of shares was for 4,000. However, we have received applications for 10,000. So we have received that many application. We have taken care of that many application by refund, by full allotment, and then balance by pro rata. So we'll first pass the entry for receipt of application money. That is bank account debit to equity share application account. The application was for 10,000. So allotment, or rather the amount that is supposed to be taken here is 2 rupees on application. 10,000 multiplied by 2 is the 20,000 amount we have received here. So in total 20,000 we have received from the applications. Now the question also states that we had refunded 2,000 applications. That means that amount, or rather that entry, will be passed here. That entry will be the reverse of the application entry. That means whatever we have passed as bank account to equity share application will reverse that entry, that is equity share application to bank account here. Now that will be for 2,000 shares. So 2,000 multiplied by 2 will give an amount of 4,000, which has been refunded back. The balance that will be left is the amount that includes the pro rata applications as well. So 20,000 is what we had received, 4,000 is what we have refunded, 16,000 is what we will be having with us, which includes complete application amount as well. That needs to be transferred to equity share capital. So the third entry will be the amount that we have received here has to be moved to equity share capital, and the balance that will be left after transferring that amount will be a part of share allotment adjustment. So let's pass that entry, and that will be, as we've mentioned, number 3 entry here. So the entry that we have passed here is equity share application account debit to equity share capital to share allotment. Now equity share application on the debit side will have 20,000 what we have received minus 4,000 what we have refunded, balance is 16,000. Out of the 16,000, the capital amount that is supposed to be transferred here only refers to application money. That means 4,000 issue, or rather 4,000 allotment multiplied by 2 rupees, 8,000 is the application money that will be only related to the capital account. So out of 16,000, if 8,000 is subtracted, whatever balance is left will be a part of share allotment. That means whenever allotment amount is due, this much amount we are not supposed to receive by all means. Excluding the call scenarios, excluding everything else, this won't be received by us because we have already received it in terms of application money. So that entry has to be passed. Now the next entry, that is fourth entry, will be allotment due. Now, as you know that this allotment is a case of premium being considered here. So entry that will be passed here is share allotment account debit to equity share capital and to security premium. Now on allotment we're taking total of 6 rupees, that is 4 for capital, 2 for premium. So on the debit side it will have 4,000 multiplied by 6, that is 24,000. On the credit side, it will have equity share capital, that is 4,000 multiplied by 4, 16,000 here. And security premium will be 4,000 multiplied by 2, that is 8,000. Now the narration also has been passed. Now we have figured out that until allotment due, this is the case scenario. Let's go ahead and pass the next set of entries here. Now, after the previous entry that we have mentioned, that is allotment due, the next entry that we have mentioned here is the receipt of allotment money. Now, whatever money that we expected, that is 24,000, is what we had figured out in the allotment due. Let's figure out what do we have received when it comes to receipt of allotment money. The entry that we have passed here is bank account debit, share allotment adjustment account debit, calls in arrears account debit to share allotment account. Total money that we are expecting is 24,000, but out of that 8,000 we are not supposed to receive because that is the adjustment here. Calls in arrears referred to one shareholder who didn't pay the allotment money of rupees 6. That has been also taken into consideration. So total of 9,200 we are not supposed to receive out of 24,000. So what we have received here in our bank account is 14,800, which has been mentioned here accordingly. That is the fifth entry. After that, we go on to the passing of the entry, which talks about, or rather which states about the specifications related to the final call being due. That means share final call account debit to equity share capital. That will be 4,000 debentures, or rather 4,000 shares multiplied by 4 rupees. That is final call took around 4 rupees here. So 4,000 multiplied by 4. So the entry that we've passed here is share final call account debit to equity share final call 4,000 multiplied by 4. That will be 16,000 rupees being received here. Now again, when it comes to receipt of final call, there are certain calls in arrears. Mr. A, Mr. B, who had 200 and 500 debentures, total of 700 shares being not paid up as final call money. Final call money refers to 4 rupees per share. So 700 multiplied by 4 will be 2,800 that we haven't received. So out of 16,000, 2,800 we haven't received. Whatever amount we have received will be in our bank account then. So bank account debit, calls in arrears account debit to share final call is the entry that we have passed. In total, 13,200 is what we have received here after subtracting the calls in arrears from 16,000, and that marks the closure of the journal entries that were supposed to pass in case 1. Now it's time to prepare the equity share, or rather the balance sheet, in this specific illustration, or rather in this specific case study. Let's start with that. So in the case 1, we've prepared the balance sheet as required. The first thing that we have mentioned here is the bank account total on the asset side. It comes to a total of 44,000 after subtracting the refund amount that we have sent back to our clients, or rather or our subscription holders. So that has been sent back. The next one will refer to equity share capital. The total comes to 4,000 shares multiplied by 10 rupees. That is 40,000 is the amount that we have received in equity share capital, out of which calls in arrears will be subtracted. That amounts to 4,000 rupees. So 40,000 minus 4,000 gives you a balance of 36,000, which has been moved in the outer column here. Security premium that we have received here is amounting to 8,000. Although there is certain calls in arrears, but they have already taken, or rather we have already taken that amount in the calls in arrears category here. Hence we need not subtract calls in arrears further from the security premium. So the total here comes to 44,000. Now that we have mentioned the balance sheet total of 44,000 for both asset and liability side, we figure out that in case 1, balance sheet has been prepared, which has been tallied, and the journal entries have been also prepared, which was the simple sum of pro rata allotment itself. So calls in arrears we have already understood. Now let's go into case 2 and figure out what are the journal entries that we have to pass there. Now, when it comes to case 2, we have mentioned certain journal entries here. In case 2, we have figured out that a total of 8,000 shares were issued, and that were, or rather those were fully subscribed and allotted for. So, we'll first pass the entry for receipt of application money, which is bank account debit to equity share application account. On application, they are taking rupees 3. That means 8,000 multiplied by 3 is the amount that we have received. somewhere around 24,000 is what we have received here. Now this whole 24,000 will be moved to equity share capital. Hence the entry here will be equity share application account debit to equity share capital. That will be the second entry. So whatever application chunk we have received, we have moved it to equity share capital account. Now after this, we move to the allotment entry. That means whatever allotment due entry we have to pass is something that will be passing on right now. So let's figure out that entry. So the allotment here refers to 8,000 shares multiplied by 3 rupees on allotment. So the total amount that we're supposed to receive is again 24,000. The entry will be equity share allotment account debit to equity share capital. Once that is done, the next part will be receipt of allotment money. Now, when we are receiving this allotment money, there is one person who has paid the final call money while this allotment money was supposed to be paid. That means we have received certain calls in advance. There are no calls in arrears. Hence, the entry that we have mentioned, as you can see, we have mentioned a 0 there. So the entry will be bank account debit to equity share allotment account debit to calls in advance. Had it been there are calls in arrears, then it would have been debited here, or probably if any question says that there are calls in arrears as well and calls in advance as well while the receipt of allotment was done, then in that scenario, yes, you can pass on this entry whereby calls in arrears will be debited and calls in advance will be credited here. So the total amount that we have received here in the bank account refers to the total of allotment money, that is 24,000, plus the calls in advance for 1,000 shares of rupees 4. That means 4,000 additional we have received. That means total of 28,000 we have received in our bank account. Now we'll move on to the next set of entries whereby we'll be going forward with the due of final call and receipt of final call. Let's start with that. Now that we have mentioned all the entries related to final call due and final call receipt, so we'll pass on the entries that we have mentioned for final call due. Now that will be share final call due to equity share capital. The amount here is 8,000 multiplied by 4 rupees, that is 32,000 in total is what we are supposed to receive. When it comes to receive of, or rather receipt of final call money, we understand that there are certain calls in arrears and calls in advance as well. Calls in advance is because in the previous entry we have understood that while the allotment was due, one person paid off the final call money as well. So that we have to incorporate here. If that was credited there, it will be debited here as mentioned in the entry listed down. So as you can see, we have mentioned bank account debit, calls in advance account debit, calls in arrears account debit to share final call. Share final call is 32,000. Calls in arrears will be for 700 shares multiplied by 4, that is 2,800. Calls in advance will be the amount that we have already received in the previous entry, that is 4,000 rupees. So the balance that is left, if you subtract 4,000 and 2,800 from 32,000, you'll have a balance that will be mentioned in your bank account, and that will be 25,200. That is the amount that you have mentioned here. Now, with this, we have completed the journal entries for case 2. It's time to prepare the balance sheet of it. Let's start with that part. So as you can see, we've prepared the balance sheet here. The asset side includes the bank total, which is 77,200, which has been derived after looking forward for the bank entries that we've mentioned in the journal part here. Now, the next set of entries includes, or rather, the next part includes the equity share capital, which is on the liability side, which comes to somewhere around 80,000, because 8,000 shares multiplied by 10 will give you an amount of 80,000, out of which calls in arrears has to be subtracted. So calls in arrears in the question amounts only to 2,800. If you subtract that from 80,000, you will have a total of 77,200, which is equivalent to the asset side. So the balance sheet that is being totaled here amounts or weighs only to 77,200, and with this we complete the case 2 details. Now, after this has been prepared, it's time for us to go ahead and figure out the details in case 3. So we'll prepare the journal entries for case 3. So let's move on to case 3 details now. Now, when it comes to case 3 journal entries, we have figured out, then in case 3, the issue was for 10,000 shares. However, the subscription received was for 40,000, out of which 10,000 was refunded and 30,000 shares were allotted 10,000 shares here. So that was the pro rata allotment done. Now, each share was issued at rupees 12. That means there is a premium here for which it has been issued on. When you consider these details, or when you have to figure out these details, you need to just make sure few things. The first entry that will be passing here is the receipt of application money. That means bank account debit to equity share application. That will be for 40,000 multiplied by 3 rupees, because 3 rupees is the application money as mentioned in the question. So let's figure out the entry that we have passed here. So the entry that we have mentioned is bank account debit to equity share application, 40,000 multiplied by 3, 1,20,000 is the amount. This includes all the subscription money that we have received here. Out of this money, we are going to refund certain amount. That means 10,000 being refunded. 10,000 into 3 will give an amount of 30,000 being refund made here. So the refund entry will be share application account debit to bank account, 10,000 multiplied by 3, 30,000 being refunded here completely. So share application account debit to bank account, 30,000 is the total amount what we have refunded here. After this, we are supposed to transfer application money itself to the share capital amount, or rather share capital account. So the entry will be share application account debit to equity share capital. However, as there is pro rata, we have received certain amount in advance, which refers to, or rather, the application excess money that can be utilized further as pro rata allotment has been given. So allotment money, it can be utilized further. So whatever amount you have, that can be then utilized into the allotment part. Hence, the entry that will be modified here is share application account debit to equity share capital account credit to a total of share allotment account or share allotment adjustment account, whichever is fine. Hence, that entry has been mentioned. Let's figure out the amount. Now, when you come on the debit side here, as mentioned in the entry, that total comes to 90,000. Now, here we have mentioned a direct amount of 90,000 into the share capital, but for bifurcation, we'll be crossing it away, or rather, I'll be mentioning a short note here. Let's mention that. So, as you can see, we have mentioned for 10,000 share applications multiplied by 3, 30,000 is the only amount that is supposed to be mentioned or utilized for application. As we have a total of 90,000 that we still have, because 30,000 out of 1,20,000 has been refunded. So 90,000 is left. Out of the 90,000, 30,000 belongs to application. So 60,000 will belong to a total of allotment adjustment money. Hence, that is the amount that we have to mention there. Now, after this, we come to the allotment due entry. As every share of rupees 10 has been issued at rupees 12, that means it is a clear case of premium issue. Hence, when we mention the allotment entry, it will be allotment account debit, or rather share allotment account debit to share capital to securities premium or equity share premium here. Hence, the entry that has been mentioned according to that will have an amount of 10,000 multiplied by 6, that is 60,000. Share capital will have a total of 10,000 multiplied by 4, that is 40,000. And security premium will have a total of 20,000, that is 10,000 multiplied by 2. Now, as you know that allotment excess money that we have also equals to 60,000. Hence, whatever amount we have received here or whatever calls in arrears we have not received here, we'll figure out in the next set of entries. Now, let's start with the next set of entries then. So the next set of entries has been passed. The next part refers to receipt of allotment money here. So we have mentioned that entry. Let's figure out that entry first. Now, when it comes to receipt of allotment money, the entry that we have passed is bank account debit, share allotment adjustment account debit, two calls in arrears and two calls in advance, or rather two calls in advance and two share allotment account is what we have passed here. Because in this case study, they've also mentioned that one person who had somewhere around X number of shares has paid the final call money as well. So that will be also incorporated here. Let's figure out the entry that we have passed here. So bank account is mentioned with 1500 rupees. Share allotment adjustment is 60,000. Although there are calls in arrears, but that won't be considered because we have already received certain money which will be adjusted here. Calls in advance refers to the total amount that we have received here in advance, referring to the final call money. And that is 1500. And again, the allotment due was 60,000. Now, the next entry is share final call debit, that is share final call account debit to share capital, that will be for total of number of shares multiplied by 3 rupees here. So 30,000 is the amount that we're expecting. Now, let's go on to the receipt entry whereby there are certain calls in arrears as well. Now, in this entry, please make sure that whatever calls in advance that you had credited earlier will be debited here for an amount of 1500 rupees as we have mentioned in the entry. So the entry will be bank account debit, calls in advance account debit, calls in arrears account debit to specifically share final call. So 30,000 is the amount that we were expecting, out of which we have already received 1500 in advance, hence we won't be receiving that anymore. We have certain calls in arrears as well, so we have mentioned that amounting to 2800 for 700 shares, and the balance that is left has been mentioned in the bank account. So we have put that amount further fit. Now, after that, we go to the share forfeiture part, whereby in the question they have mentioned that after the final call, they have forfeited Mr. B's share, which was 700. So we have accordingly mentioned that amount. So the entry that we have mentioned here is share capital account because 600 shares were forfeited. So 600 multiplied by 10 is the share capital amount entry. The next one will be to calls in arrears to share forfeiture. To calls in arrears refers to the amount that we haven't received. So 600 multiplied by the allotment capital and the final call money that he hasn't paid up. So here we have taken that into consideration. That is 4,200. And the next one refers to the balance, that is share forfeiture account. Now that we have all these details, it's about time to go ahead and mention the same thing in the balance sheet. Let's start with that part. Now that we've mentioned the balance sheet here, we have mentioned the bank side total amounts to 1,18,200. And on the liability side, we have equity share capital which amounts to 1 lakh rupees. The forfeiture capital which amounts to 6,000, which will be subtracted and then later on will be added as adjustment amount of capital, because there's one person who is a part of the adjustment allotment and hence that amount has been already received by us, hence it nullifies here. Security premium amount has been mentioned as 20,000. And if we subtract calls in arrears from the equity share capital, that will be 1,800, that will be subtracted. So total is 92,200 plus 20,000 plus 6,000. Let's figure out the total of both liability and asset. So with this, we have completed the balance sheet of case 3 as well. Now it's time to move on to case 4, which will be the last case of this illustration. So let's start with that. Now, when it comes to case 4 journal entries, we have mentioned that the issue was for 20,000 shares and the subscription also received for 20,000 shares. So, however, in the question they have mentioned that one person who had 1,000 shares, he went ahead and paid the whole amount of application, allotment as well as final call money while he applied for the shares itself. Hence, that has to be incorporated, that is calls in advance. So the first entry refers to bank account debit to share application to calls in advance. So share application will be 20,000 multiplied by 2. Calls in advance will be 1,000 multiplied by 6, that is 4 plus 2. Advance money whichever has been paid is 6 rupees 6,000. So total amount that we have received is 46,000. Now we have to move this amount, only application amount to share capital. So share application account debit to share capital, only 40,000 will be moved. That is our second entry. Now when it comes to allotment due, each share was issued at a price of 8 rupees. That means at a discount of 2 rupees. So 20,000 multiplied by 2 will be the discount. Hence, allotment due entry will be share allotment account debit, discount account debit to share capital. Total of 6 rupees are supposed to be taken because 2 rupees is the discount, 4 rupees is the allotment capital. So out of 1,60,000, 40,000 is the discount, hence allotment capital will be 1,20,000. Now, when it comes to receipt entry, we have to take that calls in advance into consideration as there are no calls in arrears until allotment. So, bank account debit, calls in advance account debit. If there are any calls in arrears also will be debited as we have mentioned in the entry. To share allotment account. Hence, 1,20,000 out of that 4,000 we have already received. Hence, 1,16,000 is what we'll receive in our bank account. Now, let's go on to the next set of entries, which is final call due and receipt of that. Post which we'll prepare the balance sheet of it. Now, the next set of entry refers to final call due. Hence, the entry that we have passed here is share final call account debit to share capital. 20,000 multiplied by 2 is the amount that we are expecting, that is 40,000 rupees. When it comes to receipt of this final call, there are calls in advance, that is 1,000 shares multiplied by 2, and calls in arrears 1,000 multiplied by 2 because 2 people didn't pay for that same thing. So in total 4,000 we are not supposed to receive. Hence, the bank account will be debited with 36,000, or rather bank account will have a total of 36,000 as received out of 40,000. So that entry has been passed. Now with this we complete the journal entries of case 4. It's time to prepare the balance sheet, which is the last part of this case 4 and the illustration as well. Let's start with that. Now the balance sheet has been prepared here. Bank account total comes to 1,98,000. We have provided a discount that will be a part of our asset as miscellaneous expenditure. 40,000 has been mentioned. Share capital comes to 2,40,000, out of which calls in arrears 2,000 will be subtracted. So the liability side totals come to 2,38,000, and so does the asset side total comes to 2,38,000. So with this, we have tallied the balance sheet of case 4 as well. And here we complete the illustration, which is related to comprehensive problem 8, including the pro rata, calls in arrears and calls in advance as well. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.